In this video, I show you three unique ways of using one of the most powerful indicators available in technical analysis, the Bollinger Band. Now, there are many ways in which one may enter a trade. One may enter a trade by using an offset Bollinger Band. One may enter a trade by using a gap. One may enter a trade by using a candlestick reversal pattern, and so on. Now, what exactly is a Bollinger Band? A Bollinger Band is a moving average which is bound above and below by two lines which are two standard deviations away from the mean. Here we have a chart of the Nifty on which I'm drawing the standard Bollinger Band. Now, over and above this standard Bollinger Band, I'm now going to show you a method of how to exit a trade with a greater profit and a greater guarantee that the trade is indeed over. Most people use a standard Bollinger Band by exiting at the two standard deviation level. Let us now draw another Bollinger Band on top of this band, which has the top line and the bottom line, which is 2.5 standard deviations above and below the mean. We now have a zone on top consisting of two standard deviation and 2.5 standard deviations, both above and below. Now, essentially, the methodology of exiting a trade, which you may have entered by any of several means, is as follows. You wait for the price to go to the range between 2 SD and 2.5 SD. Now, with the price exceeding 2 SD, there may be a possibility that there may be a much more upside left. However, we now put a band at 2.5 SD, and if the band goes to 2.5 SD and comes down, then we exit the trade. So this will give you a much more reliable method of exit. In other words, we wait for the price to bounce off the 2.5 SD and break the 2 SD level. At this point, a reversal pattern like a candlestick reversal or a gap should preferably appear. But even if it does not, exiting when the 2SD is on the downside will give you a much better guarantee of a graceful exit. Now, this ensures that you do not exit early. The reason being that the band itself is trending, and the movement to 2.5 SD and the return to 2 SD will also take time, causing the band to continue moving in the direction of the trend. And therefore, even if you exit at a later time on the 2SD, you will actually be exiting at a higher price for a buy or a lower price for a sell. Here is an example of the same. Now take a look at this. Here we have the upper band and the lower band shown with a light red and a deep red color. Here you can see that we exited the lower band, went below the 2.5 SD and re-entered, at which time you would have squared your trade. Similarly here, the same thing happened. And in all other examples, you will find wherever I have circled in red or green that this particular method will give you a much better exit than simply exiting at a normal 2SD. That was the first way of using the Bollinger Band in a unique way. The second way of using the Bollinger Band is to combine it with a momentum oscillator. Remember that the Bollinger Band is based on a moving average. A lot of people use MACD with the Bollinger Band. They use other moving averages with the Bollinger Band. Please do not use two separate moving average indicators. Rather, use a momentum indicator which is based on another principle and the Bollinger Band which is based on another principle to combine the two to get better tops and bottoms and to get better changes in the direction of the market. Remember that a leading indicator like an RSI combined with a lagging indicator like a moving average, which forms the basis of the Bollinger Band, will always give you a more reliable signal than any one of these alone. Here is an example of how, by combining an oversold RSI with the bottom of the band or an overbought RSI with the top of the band, you get highly accurate turning points in the market. You can see a top which coincides with an overbought level and the top of a band, a bottom which coincides with an oversold RSI and the bottom of the band, and so on. This is an example of where the system went wrong. But by and large, in more than 90% cases, you will find that this combination of RSI and Bollinger Band will work wonders for you in your trading. So our third method of trading uniquely with the Bollinger Band involves using the bandwidth. We shall define the bandwidth as the difference between the upper band and the lower band of a standard Bollinger Band. We define another variable called percentage B, which is basically equal to the closing price of the last candle minus the value of the lower band divided by the bandwidth. Now, intuitively, if you think about it, it is basically telling you where is the closing price in relation to the lower edge of the band normalized to the bandwidth. And the system which has been developed for taking out buy and sell signals based on this concept is as follows. If the bandwidth of the previous candle is the lowest of the last 20 candles. In other words, the bandwidth has been declining and has reached a lowest value. And there is a breakout in the current candle. In other words, percentage B is greater than 1. Then it is a buy. Similarly, if the bandwidth of the last candle is the lowest of the last 20 candles, and the percentage B is less than 0, in other words, we have broken below the lower band, it is a sell. Please remember that the bandwidth is not a very easy parameter to deal with. It is not as easy as the moving average or the upper band or the lower band. We are now talking about a distance between two bands. So this system is not an ideal system, but the percentage of success of this system is very, very high, maybe even to the extent of 80 to 90%. So it may not give you frequent signals, but when it does give you a signal, treat it seriously. This is the essence of the third system, which is based on the bandwidth of the Bollinger Band. So here are three examples of this system in action. The first is on the Nifty. As you can see that the blue bars which are above the zero line give you the buy signals, and the ones which are below the zero line give you the sell signals. The second is on Cummins, where we have mostly buy signals since it has been in a bull run most of the time, but it has given sell signals also, which have worked pretty good. And finally, we have HDFC Bank, where we have mostly again buy signals. So these are three examples of this system. The Pine code for TradingView for this system is given in the description and can be copy and pasted in TradingView for your use. Now, using these unique methods of applying the Bollinger Band will give you a phenomenal edge over other traders in the market. Please be aware of people who are promising you quick returns and shortcut methods in the market. Nothing like that exists. You have to go down the learning curve and master one tool at a time to be able to properly use them in the market and make enormous money in the market in the long run, provided that you use these tools with the right amount of discipline. I would request you to please look at the books which we have given in our description below this video, and to share, like, and subscribe to this video